Transition approach. An entity shall apply Ind AS 116 for annual reporting periods beginning on or after 1st April 2019. Thus, Ind AS 116 transition provisions are applied at the beginning of the annual reporting period in which the entity first applies Ind AS 116. That is the date of initial application. For example, an entity with a reporting date of 31st March 2020 applies the transition provisions as on 1st April 2019. There is a practical expedient provided which permits lessees and lessors to make an election of not reassessing whether existing contracts contain a lease as defined under Ind AS 116. Further, if an entity chooses to apply the practical expedient, it must be applied to all contracts. That is, an entity is not permitted to apply the option on a lease by lease basis. Transition options for lessees. A lessee is required to apply Ind AS 116 to its leases in either of the following ways. First approach is full retrospective approach. Second approach is modified retrospective approach. In case of full retrospective approach, apply retrospectively to each prior reporting period presented, applying Ind AS 8. That is, an entity applies Ind AS 116 as if it had been applied since the inception. That means from the starting. A restated opening balance sheet as on 1st April 2018 will also need to be disclosed as required by Ind AS 1. Hence, the balance sheet for the three periods will be presented as at 31st March 2020, 31st March 2019, and 1st April 2018. Second approach, modified retrospective approach. When applying the modified retrospective approach, a lessee does not restate comparative figures. A lessee recognizes the cumulative effect of initially applying Ind AS 116 as an adjustment to the opening balance of retained earnings at the date of initial application. In case leases previously classified as operating lease under Ind AS 17, in case leases previously classified as finance lease under Ind AS 17. First, consider value of lease liability. In case leases previously classified as operating lease under Ind AS 17, a lessee recognizes a lease liability measured at present value of remaining lease payments discounted using a rate at the date of application of transition provision. In case of leases previously classified as finance lease under Ind AS 17, the value of lease liability will be carrying amount of the lease liability. Carrying amount of the liability under Ind AS 17 shall be taken as a carrying amount of the lease liability. Next, value of ROE asset. In case leases previously classified as operating lease under Ind AS 17, a lessee measures the ROE asset on a lease by lease basis, either alternative 1, the carrying amount as if the Ind AS 116 had always been applied since the commencement date, but using a discount rate at the date of application of transition provision, or alternative 2, an amount equal to the lease liability. Next, in case of leases previously classified as finance lease under Ind AS 17, the value of ROE asset will be the carrying amount of the lease asset under Ind AS 17 shall be taken as carrying amount of the ROE asset. Next, transition provision for lessors. A lessor is not required to make any adjustments on transition for leases and shall account for those leases applying Ind AS 116 from the date of initial application, except in case of intermediate lessor, that is, in case of subleases, who shall reassess subleases that were classified as operating lease, applying Ind AS 17 to determine whether each sublease shall be classified as operating or finance lease, applying Ind AS 116. The intermediate lessor shall perform this assessment at date of initial application on the basis of remaining contractual terms and conditions of head lease and sublease. For subleases that were classified as operating lease, applying Ind AS 17, but meet the definition of finance lease, applying Ind AS 116, account for the sublease as a new finance lease entered into at the date of initial application. Any gain or loss arising on the sublease arrangement is transferred to retained earnings.